Is it time to buy in Victoria? The Victorian government is making it less and less attractive for investors because of so many different changes. But is there a hidden opportunity amongst all the negative talk? In this week's Listener's Choice episode with Arjun Paliwal, Head of Research at InvestorKit, we're going to be answering exactly that and more. And if you've got an area you've been looking at buying in that you want a data deep dive done on, click the link in the show notes below and tell us a little bit about what you're wanting to buy, and we could be making an episode for you. My name is Todd Sloan. You're listening to the Pizza and Property Podcast. Right now, let's get into the episode. Arjun Paliwal, how you going, mate?
Mate, I'm good. Another session. Let's do it.
Yeah, man. It's time for another listener's choice. So we're doing the review top down, though, starting with Victoria, going into Ballarat, then looking at Lucas. But before we jump into it, man, did you want to actually read out the question that Brenton sent in?
I have got it here. So I've got land that we purchased for 200K, so pretty cheap block of land purchase, which is great.
Yep.
Now worth 290K, so that's awesome. Well done. It's almost, 30%? So it's pretty good. More than 30%, actually.
Done well, Brenton.
Very high. Should we build and rent out or sell now? Not sure if there will be much growth in the area in the next 5 years. Could put money made into better area, ?
Okay. All right. Well, it sounds like we've got a few different pieces to the question there. So if we can get into could we put money into a better area, I suppose that's really going to be answered when we get down to the Lucas side of things. Yep. But if we can start all the way up the top, what's Victoria looking like just generalized as a state?
Victoria's been shaky for the last few years. So I guess post-COVID, Victoria really started to slow down. It had obviously the year of 2020, 21 where everything did well everywhere. But following 21, it kind of became a rocky picture. Things slowed down across Victoria, and whilst yes, population's been improving, overseas migration, the big city of Melbourne, all the things sound pretty good. The main thing is it was a rocky period for Victoria. I guess some good things for Victoria in recent states though, and recent data is that ComSec State of the State ranked it the number 2 economy. Now that is some positives. It's not the full picture of its economy though. Unemployment rates still remain pretty low. State debt, state taxes, these things seem to still be weak points. And the investor sentiment still seems to be a weak point for Victoria because they charge you across everything. They charge the highest stamp duty in the country. They charge rental compliance costs. And they also charge a lot of land tax as well, even for smaller prices.
They love their land tax at the moment.
Yeah, I think the main thing with Victoria, though, is that these things have a yin and yang attached to it. So one side, you try and ping people for costs. It's not immediate, but the delayed effect is that it'll find its way through rents. It'll find its way through investors departing, which will then come back to rents. And when rents rise, then it tracks price growth as well.
Okay, so as a state, pretty stagnant at the moment. It's got its issues, but it's also got its positives. And as far as population's concerned, am I right in recalling something about it taking over Greater Sydney as well recently?
Yeah, they did a cheeky way. They basically added a big council region that wasn't kind of part of Melbourne into the data. Right. Yep. And now it's the biggest city in the country. It's like me going, hey, Wellington, 400,000 town where I'm from. We'll just add all of North Island here and it's now the biggest city in New Zealand. So it doesn't work like that, but hey, it works technically.
Yeah. Okay. So on paper, they grow.
Yeah.
Yeah. Okay. All right. And as far as Ballarat's concerned, because I know Ballarat, Bendigo, a lot of regional Victoria did like smashingly well as well. That was more late teens, if I got that right?
Yeah. Sort of 2017 from a regional Victoria sense started to see the trends come alive, and then 18, 19, 20, and even 21 was good. And then in recent times, they've slowed down. But yeah, Ballarat was one of those star performers from sort of 2017 up till about 2020. And that was more when Melbourne sort of calmed down. Now, Ballarat since then, in recent times, has had a pretty bad run. Over the last 12 months, Ballarat's down about 4.3% in our data, and Lucas in particular is down a little bit more. So I do think perhaps the actual savviness of perhaps the land purchase in the right time, the right purchase price, maybe that helped the land growth, or even just actually the projects that are coming up that are now priced more. That's something that's a unique phenomenon with new builds in recent times. There's actual growth happening where the area might not be growing just because the overall projects are being sold for more now in general.
Like building costs have arisen, have gone up so much,
And I know land is isolated and we can't treat it the same way, but people are paying for overall projects at times as well for build and land, and they're paying a bit more. But overall, yeah, Lucas median prices have come down double digits. Now, perhaps, that's the median also being dragged down by more affordable purchases happening. But there is an element of decline considering Ballarat took a step back over the last 12 months.
Interesting. Because I've been looking around Ballarat myself and I've noticed there's quite a lot of listings as well. Like it's, I'm going to butcher this pronunciation. Is it Stepaspool?
Sebastopol, I think it is.
Well, I really said that wrong. Sebastopol. Okay.
No, look, Ballarat's trends have weakened. It's clear. I think it had a really good run, had some good performance, and how we can say the trends have weakened is firstly recent price growth that has been in the negative territory. But second thing is we measure a few statistics here, and what the core thing is days on market. There's been a 70% increase in days on market over the last 12 months.
It's huge.
Right, so that's a big turnaround to say people are taking longer to sell.
Yep.
The next thing that we can see as well is that alongside the days on market increase, we can also see a listing level increase. Inventory now is sitting at about 6.8 months for the region of Ballarat. Now, to give you some context, 3 months of housing inventory is pretty balanced. And Ballarat used to head into that sort of 2 to 3 months, and it was quite tight at some point some years ago. But as the years have gone on, that new supply's kicked in, established supply coming up for listing, and housing inventory's picked up. Now, I think that is a big cause for weakness, because you can also see the number of interested buyers or number of interested people per listing is also reducing and quite weak, which is a statistic to REA, which is quite popular. Stock on market percentages are pretty high as well. And then when we look at it, vendor discounting isn't the prettiest either. So when you look at time to sell, how much discounts are happening, how much availability of stock there is, and also recent price growth, which has been declining, the region of Ballarat hasn't had a pretty run in the last 12 months.
So as far as when they zig, you zag, what signs would you need to look for that to be more like a smart choice versus like, no, it's still not time to zag yet. There's plenty of zig happening. That's the right one.
Yeah, it's a good question. So I think the first thing that's unique with Victoria, I call this a second wind market. And this is where markets go through firstly early adopter, which is they're not showing huge trends, but they're starting to show, and they've been weak in the past, but something's starting. That itself is starting with weaker price growth, but then it starts to grow and it beats its 10-year average. Give you an example. We predicted Townsville a few years back would be an early adopter market that comes into fruition. And that's because we saw signs that was leading the short-term average to outperform a long-term average, meaning something's changing.
Okay.
Then you move to hotspot markets, and hotspot markets have two phases. Phase one is the big ride up the curve. And then phase two is still above average, but you're just coming down the curve. For example, Adelaide between 2020 to 2023 was phase one, meaning growth was getting hotter every single year, and it was very strong. But Adelaide in 23 and 24 is still growing above average and a very strong performer, but it's just on the second side of its bell-shaped curve, meaning it's growing above average, but just growing a little bit less than what the boom times were on the ride up. And so you still get some really solid growth over here because Adelaide had a 20% year once, and the second part was still a 10% year, and that's above long-term average. But then you have a second wind. It's when this market reaches the bottom of phase two, and you have second wind phase one. And this is where you're actually starting to decline. This is Bendigo right now declining. This is Ballarat declining. This is Albury-Wodonga declining. And in these declines, what tends to happen is that you have rental yields really start to rise because prices aren't rising, but you see rents are. Yields keep going up. And eventually there becomes this attractive point. Yields go up, investors look at it and go, the rest of the nation's grown, this isn't growing, but I like it. It's still got so many things going for it. It could be growing next because it's had that weak time while everywhere else went strong. Then they're also looking at fundamentals and going, well, there's enough stock here for me to pick up something decent in a city that's had a good long-term percentage because Ballarat is a great long-term performer. So is Geelong, so is Bendigo, so is Albury-Wodonga. But these recent dips could be like, I'm buying below peak, yields are rising, it's pretty attractive, and the rents keep getting better. What if yields rise more? What if interest rates come down? And then what if everyone starts going, well, Victoria's economy is recovering again? And this is where people could time themselves in an area where it's actually a lot easier to buy. And then you have the second phase of second wind, which is like, now it's Brisbane and Gold Coast. And it starts to rise up again for another solid run. That's exactly what happened in Brisbane and Gold Coast. 2022, believe it or not, was not a great year for those markets. And then into 2023, those markets started fading and stabilizing. And then late 23 into 24, those markets really picked up. And they went through that same second wind phenomena. Listings pick up, stabilizing, and then all of a sudden people attacked it again. So I think Ballarat's kind of there right now. And it's the same with the suburb of Lucas, where it's like, it's the first wave is the second wind. If you want to be a savvy negotiator, savvy buyer, and you need a Victorian purchase, then locations like Ballarat, Albury-Wodonga, Bendigo, these are great areas where you can go and pick up something at a pretty good deal right now and envision the yields to change. You've got to be patient. And if you're working after short-term growth, then the growth is better elsewhere. But if you're looking at that patience piece, the yields will keep rising and eventually will attract attention again.
So as far as Lucas is concerned, basically it feels like everything that you've really just explained there for Ballarat as a whole applies pretty directly to Lucas as a suburb.
Absolutely. The only thing with Lucas, though, is we are still seeing high inventory levels in Lucas too, which means there's a lot of choice, right? So if your goal here, Brendan, with the question is, over the next 12 months, will I build? Will I get better value? And then if I start to hold it, will the growth be great? Firstly, I would say probably not, because right now, when the second wind is in the first stage, the growth over the next 12, 18 months isn't going to be amazing. But if you're saying, well, I've got other pieces to play, Arjun, I've got other properties in my portfolio, and I'll be making moves elsewhere without needing to let go of this, then I would go ahead and continue on, because at the same time now, you've all of a sudden got a market that's about to go to a second run. But that second run might not come in for a couple of years.
Okay,
so it's more the what pieces in this puzzle.
Yeah, so if it's holding him back from growth elsewhere, then maybe it's time to reconsider and potentially shed the asset. But if it's something that he can just kind of have sitting there and continue growing in other markets that are timed a little bit more in his favor, then it's like, well, yeah, longer term, or not even longer term, from what you're saying, it sounds more like a 2 to 3 year kind of mark.
Absolutely, medium term, right? So right now, the way the rents grew and are growing in Ballarat's rental growth over the last year hasn't been amazing. So I still think that maybe it might be a little bit longer than the next 1 to 2 years for the second wind to emerge.
Okay.
But if we see this price decline continue or stabilize and rents keep pushing up, then it's only a matter of time where investors like it, renters don't like it, and then more buyers are pushing through, because Victoria had a taper off, and it might be one of those few areas where 5 years on, Perth's boomed, Brisbane's boomed, Adelaide's boomed, regional Queensland boomed, regional SA boomed, and you go, well, what's left? You start to looking back at these areas.
And just finally on this, do you feel that Ballarat, Bendigo, Shepparton, like all of those kind of, like they're almost, if satellite city is even the right term, it's like it is technically commutable to Melbourne, but you probably wouldn't live in Ballarat and work in Melbourne, but you could if you wanted to.
You very much do, and many do actually.
Okay, many do. Do you feel that they're still very connected? Like if Melbourne goes through a boom, Ballarat goes through a boom, vice versa? Or do you feel that they very much have their own kind of like property clock, for lack of a better term?
Yeah, look, they do have their own property clock actually. So I think the key thing to consider is the 10-year growth for Ballarat is about 88%, where the 10-year growth for Melbourne is around 60% in many areas.
Yeah, wow.
So you can just see there that there's still a big difference. And the regional Victorian explosion was more around 2017 to 2020 and 21, whereas the Melbourne explosion was more 2012 to 2017. And so, yes, there was that crossover in growth that happened in regional Victoria, but regional Victoria lagged Melbourne. Now, it's not going to perfectly lag Melbourne all the time, but I do think that they don't operate the same way at the same time. And I think Melbourne is its own beast.
So as far as Brenton's question's concerned, it sounds like it's not really a no or a go. It comes down to what his options are.
I have this habit of doing this, right? I don't give you an exact no or exact yes. But the problem is, like, I think when you consider investing and you have choices like this, letting go is one of the last things you should think of as an investor. When I say that, it's like property trading in Australia, and I've seen people say this, and you should do it, and the growth elsewhere would be better. I'm totally correct. It's like you can get better growth elsewhere. I'm not saying that you can't. There's always going to be a better location at any given time than the one that already grew. That's usually the case. But the problem is cost to buy, cost to sell, and total compounding wealth and multiple streams of income. All these things need to be considered. And so if most people are going to build a portfolio, you're not going to build a portfolio trading property and then all of a sudden having one debt-free property because you traded it so profitably 3, 4, 5, 6 times. You're going to build a portfolio from having 3 to 5 properties usually that eventually get to debt-free and serve you the purpose of why you first invested, which was an income stream. Too many people isolate property trading and say, trade this here, jump in here, get in that market here, and you keep getting rid of your pieces. Wait, great. If you want your answer to one debt-free property, you've got it, right? But if you're trying to get to 4 held properties, then figure out how you get rid of debt on them, I think the answer is better through holding these assets, especially if you've gotten this land upside, you're already winning. Could you perhaps pull out the equity, not just focus on the build, but pull out that equity and get somewhere else, another property, and you've still got something in Vic holding that something is going to then come back around and you've got that asset there.
So I'm really hearing that if you can move forward and keep the land, realistically, you're probably going to do better out of that. It's going to take a little while to perform for you. However, if it's like this is the thing that's holding you back and you've got no other options, well, then maybe look into it, but look into that with caution.
Absolutely. And, you know, people underestimate the costs of something. And so I'll give you an example. People go 200K land, 290K value. Well, whose value is that? Is that the value of the next buyer? Is that the valuation of the bank? Or is that the value?
I don't think Brenton said. So yeah, don't know.
So is that someone going, I signed a contract to sell, 290 is in your desk and it's up to you, Brenton, to sign this? It may not be the case. I mean, I can tell you right now, I've sold property before. And when I sell property, sometimes what you think it's worth versus what you actually get are two different stories. I thought this home that I was going to sell was going to get me, you know, well into the 1.8s and it got 1.7s. Do you know what I mean? This was interesting, right? It was a scenario that I didn't think of because that buyer that you're thinking that matches the actual valuation may not be there at the time.
Brenton, I hope this has answered your question, mate. And if you guys watching have got a question on an area that you're really wanting a deep dive on as well, make sure you click the link in the show notes below, send it in. And if it's chosen, we'll make an episode with Mr. Arjun Paliwal himself. But Arj, is there any other final words of wisdom you got on either Victoria, Ballarat or Lucas, mate?
No, I think Victoria's got some potential ahead, but the potential needs patience. And whilst we've come off this property boom, Victoria is one of the few locations which hasn't gone through that property boom as much as others. So that may be the next spot eventually in due course.
Arjun Paliwal, Head of Research of InvestorKit, thank you so much for jumping on the show, mate.
Thank you so much.